Hello everybody, welcome to my channel. Today we're going to speak about Intel INTC, the ticker is INTC. The analysis is following a Q4 2019 and here we go. Okay, so my presentation will be split into five steps. First, I will analyze the three income statement, balance sheet, cash flow statements. From there, I will extract the main, let's say, value, the price ratios and stuff like this, into one single card that we call DNA card. Here, you're gonna have all the information, all the, let's say, the main data to decide whether you want to invest or not in the company. Then after, I will do a quick metrics comparison with AMD, just to give you a taste of like a feeling of how the, let's say, the industry is behaving. Regarding just the technical, from 2015 to today, it went, so the company has been trading on an upward channel. And basically here at the moment, it's trading in the middle of the channel at $60. Regarding the income statement, I present you here three graphs showing the last 4 quarters. And I usually do this to give you like a dynamic vision of how the revenue, margin, and also OPEX split are behaving. For Intel, actually the margin, for example, gross margin has been very, very steady, while the net income has been increasing. Also, the revenue has been trending upward over the last 4 quarters, but the revenue year-over-year increase is like around 10%. Regarding the OPEX split, as you can see, Intel is generating a really healthy net margin between 25 and 34%. And also, what is super important is to look at how much research and development they invest from the revenue. And basically, a company usually in technology invests around like between 5 and 15%. Pharmaceutical is like much more, but actually 17% for such a big company is really a big plus, a big bet, let's say, for future development of products and staying like ahead of the competition. Regarding the balance sheet, I do the same concept as the income statement. I give you the vision for the last 4 quarters, so 1, 2, 3, 4, so that you have a dynamic vision of what's happening in their balance sheet. As you can see, first, I look at the long-term liabilities, and the total long-term debt has not been increasing over the last 4 quarters. They just increased their plant property equipment from, let's say, by 6 billion. And also their liquidity, cash and equivalent, receivable and inventory has not been changing so much. In total, this current asset is worth $31 billion, which compared to the current liability, 22 billion, is almost 10 billion more. So that's the working capital is $10 billion. Now let's look at the cash flow statements. What I like to see here is, so first I will explain you, these are the last 4 years of cash flow statement, and I just extract the 3 main components, which are cash from operation, cash from investing, and cash from financing, and I put them into the graph. As you can see, what is really, let's say, comforting is a positive cash from operations, which is also increasing from 21 billion to 33. As you can see also the capex, which is like the orange part, this corresponds to this like $10 billion in 2016 up to $16 billion in 2019. So they increased the capex year over year, but basically it's still something acceptable, which gives them even more, let's say, room, let's say, really free cash flow to play with buyback share. So as you can see here, and also dividend. But as you can see, the ratio here is twice more money is spent into buyback than into dividend. So overall, this is a really healthy balance sheet. They invest a lot already, like 17% of their revenue, but they still manage to perform some buyback and to pay a dividend, which is really like a very big, a good combo. As I was explaining on this financing part, the company has been buying back share on a yearly basis, but basically over the last 2 years it was even more, which brings the total of shares bought back over the last 4 years to 9%. Now let's look into the DNA card. On this slide, my exercise is to calculate basically the free cash flow return and see how much really money they generate. So I first try to calculate the enterprise value, which is based on the market cap. When I remove the working capital, I add the long-term debt, and I remove the long-term investment. Why I'm doing this is just basically that at least you consider how much cash they have in hand, and also how much debt they have in their balance sheet. So it gives like more fair value of the enterprise. Also, the free cash flow generated for me is the earning removed by subtracted by the depreciation. So basically, they generate around 10 billion free cash flow over 2019, which brings the yield return of 3.6%. If I just base these earnings on the last quarter, it brings even a higher yield, around 6%. What I like, at least at the end, to calculate is if I remove all the R&D expense, how much the company will yield, and it's 10%. But here in this case, it doesn't make too much sense because it's such a technology company that R&D actually is really like the key to maintain this, say, competitive mode. So I'm not basing this, let's say, I would not base my investment on this value, but more on this like 3 to 6% yield return. On the price ratios, look at this. So the EV to sales enterprise value divided by the sale numbers in 2019 was less than 4. And for a company that is generating like really like a gross margin of 60% and such like a net margin, to me this is a really let's say good valuation at the moment. Like not cheap, but not overvalued, a little bit undervalued. The only thing I don't like is the price to cash, which is 20 and usually has to be less than 10 if you really want to have like a company with enough cash. But as I was mentioning, the company is using their cash to pay dividends and also to buy back shares. So in case of issue, let's say in the near term future, they can always cut back at least the buyback, not really the dividend because usually the shareholders do not like this, but the buyback can be clearly, let's say, reduced, and they could generate at least 10 billion dollars of really of cash in a single year. Now I like to look at the growth, so the last 3 years growth. So I compiled the revenue growth over the last 3 years and also the OPEX growth. And as you can see, it's really interesting here, is that the revenue has been growing by 20% over the last 3 years, but the OPEX actually has been decreasing by 8%, meaning that the company is really like cutting on the costs and having a very a more efficient working process, which gives them basically a interesting operating leverage. So even though the growth number here on the 3 years is not impressive, what you really need to put into perspective is the revenue growth minus the difference between revenue growth and OPEX growth, which here actually is quite significant. Okay, I just put this one. Now let's do the battle. So I just compare Intel and AMD. So I do the same exercise for the, let's say, the ID card, DNA card of AMD. And then after I just put face to face the main metrics that I want to compare, and maybe like just give a 1 if the company is winning, and then make a 0 if the company is losing. Then after I make the sum and then just give you like the winner, who is the winner and who is the loser. But basically, Intel actually here is the winner. I leave it to you to look really into details, to make a pause on the screen and to have a deeper look. But basically, to me, what Intel is really superior compared to AMD is first, on the yield return. As you can see, AMD has much lower. On the price ratios, as you can see, EV to sales of 4 compared to EV to sales of 10 for AMD, so the company is like really overvalued. And the reason why the company is overvalued is because they have a really nice revenue growth. AMD has almost 60% revenue growth. But what the usual, let's say, investor doesn't look at is how much the OPEX is growing. And as you can see here, 56% OPEX growth against 58% revenue growth, meaning that basically there's no operating leverage. Okay. Also, yes, so on the depth side, I think AMD has still also a decent profile. But basically, for me, Intel, and the numbers show it, Intel is a big winner of the battle. Just as a conclusion, for me, Intel benefits from a good balance sheet, very little amount of debt, positive working capital. They have a good free cash flow return, so it's like not 10% here, sorry, but more like a 6% if you consider R&D. They have also a decent growth, a bit less than 10% year over year. But what really makes them their strengths is the fact that they generate a lot of cash, which is hidden in this, let's say, in this cash flow statement. And they use it at the moment for massive buyback, so up to 9% of the total shares. But also, the real hidden gem here on Intel is that they invest so much into research and development. So I made this really quick graph um, showing the last 4 years of R&D investment for a few companies. And as you can see here, Intel and INTC is investing $13 billion into R&D, which puts them basically in maybe the best 10 companies in the world in terms of budget for R&D. So as you can see, it's making as much R&D as Facebook, almost as much as Apple and Microsoft. So this put them like really in a very, very strong position for the future. Okay. If you compare, AMD only has a $1.5 billion, which is almost 10 times less than Intel. The last point for me was like just on the bad side was just the fact that they don't have much cash in hand. But as I was mentioning, they can really play with how much cash they want to have in hand with these numbers of buyback, a budget that they want to allocate for the year. So really, they have a lot of room for, let's say, possibly cutting R&D if they need to, which I don't think they will be doing, but at least cutting back a little bit into the buyback. And this will give them possibly enough cash to weather the storm, at least for the near term with this pandemic. So I think that's it. I leave it to you here on the DNA card so that you can have like a last snapshot of the company. I hope you enjoyed. If you have any comments or remarks related to Intel, just let me know. And if you have any company that you would like maybe to get covered by in my channel, just let me know, and I will try to do some homework. Okay, thank you very much, and see you soon for our next episode. Bye bye.